Hey there, everyone. It's Mitch Goldberg. Thank you so much for joining me. You are watching a brand new live episode, live podcast. Be the boss of your money because I want you to be the boss of your money, not your money to be the boss of you. The whole basis of the show is to help you, the viewer, to become the best possible version of your financial self. It's really important. I think a lot of things in your world could be cured uh, with more money. I really do. Listen, money is not health and money is not love. I get that. But a lot of the stress we have and a lot of the issues you have is about money. So what I want to do is teach you about money, what it does, what it can do for you. And look, I think if people are truly motivated, everyone has the ability when they're motivated properly to be better with their money. And it's hard to change yourself. It's hard to change habits and desires. It's if spending money and shopping is what gives you the dopamine rush, it's hard to replace that. We need to maybe find something else that can do the trick. It's What can I say? You know, the game of money is a lot like the game of life. Uh, Ample room to make mistakes, and I just want you to be better with your money. And I go through things on this show like personal finance. We talk about IRAs, Roth IRAs. We talk about investing. We talk about all kinds of money issues. And then we talk about behavioral psychology. We get into investing tips a lot here. I want to explain to you how the economy works, how the market works. We think we know it all until we don't, until you realize you just don't know what you don't know. And then we talk a lot about business, and I have terrific guests on as well. And I have a bunch of new guests lined up. In fact, right after this show, that's what I'm going to work on. I'm going to work on buttoning down my guests and all the dates coming up. I actually find that the shows when I have guests are my favorite shows. They might not necessarily get the most viewers. Some do, but some get a lot of viewers. But I really enjoy having the guests on the show. So today we're going to talk about the market. The stock market continues to go lower. What's the problem now with the stock market? We didn't have enough punishment this year. This year's not hard enough, right? So now the market's going down. It's going down quite a bit as well. So why is it going down? Does it deserve to go down more? Spoiler alert, I think yes. And, we need to talk about what we can do and if you're positioned properly. The idea is to be positioned ahead of time, not reacting. So we're going to roll a quick introduction. We're going to go through the quick market update and all that good stuff with perspective. I sprinkle in my little words of wisdom because I've been doing this now for 30 years, and then we'll call it a day. I don't do these live streams on Fridays. I do a blast email instead. So today is the last one of the week, and Thursdays are usually a little bit shorter. So here we go. Stick around. It's going to be good. All right, we are back. Thank you so much. If you're just joining us, my name is Mitch Goldberg. You're watching the podcast, Be the Boss of Your Money. It's all about making you the best possible version of your financial self. I want you to be the boss of your money, not your money to be the boss of you. This is the place that you go to learn about personal finance, investing tips, business, and other matters that are related to those. So let's get right into it. We'll do a quick share screen. We'll talk about the market, what happened today, and then we're going to sprinkle in some words of wisdom and take you through a nice little process over here. Okay, this is how we do our the show format. All right. So you see the Dow is down 405 points. We had a nice little rebound yesterday after a multi-day drubbing in the market. I use the word drubbing once in a while. Okay. S&P 500 down 60 points. NASDAQ down almost 2%. down 221 points. So you see the Nasdaq was down the most because it has the most exposure to technology, and the Russell 2000 was down 1.23%. It's actually went down the least of the major averages that we follow here. The Russell 2000, it's like the forgotten index, but that's the 2000 small cap stocks index, and small cap stocks reflect more of a domestic economy. It's not as multinational as mid cap and large cap stocks. And the VIX was back up to 29. So the line in the sand I've been saying is 30. If we see the VIX get over 30 and stay over 30, that's a negative sign. The VIX is the fear gauge. So when the VIX is green, like you see in the screen, you see that? When it's green and it goes up, that's actually a negative. That's like the one thing you want to see that's red on your screen, okay? So the Dow is off. It did start the day up, though. So I can't stand the days when the major averages start up and then give it all back and then go down a lot like they did today. Those are the worst days. Technically speaking, those are the days that do damage to the stock market, that do damage to the technicals. So it's a pretty negative day. I really don't have a lot of good things to say about it. Big news after the market. We've all been waiting for Peloton. Peloton has become like the the quintessential stay-at-home stock. It's replaced the gym. It's a great product. Don't get me wrong. And people who use them, and I have a ton of friends who have Pelotons, they love their Peloton. More importantly, they love the personalities of the people that are teaching the classes. Just people who are really good at engaging with you through a video screen. It's really incredible what they've accomplished. Okay, so after the close, the stock is up 6. So here's the thing, though: the stock traded to 98 and change. Disregard this little gray thing. Okay, it finally went away. The stock traded a new high today at $98.61. I don't know if you could see that on your screen. And by the end of the day, it closed negative. It closed down to 87. So more than a 10-point drop from its daily high. And that's like emblematic of today's market, except even more exaggerated. At least they had a really good number and good forecast going forward. And it's up 6, but you need it to go up another 4 points to reach that high that hit today. So to me, that looks like the stock has put in a near-term top on a technical basis. That's my opinion. It's not a stock that I'm really that interested in, to tell you the truth. It's been a big winner, don't get me wrong, but I have other stocks that were big winners, so you can't own all of them, right? Let's take a look at the averages. I have all the FANG stocks. I have the Amazons of the world. I have other really good stocks, but Peloton is the big story of the day because that has just become such a emblematic of today's pandemic stock market environment. All right, but let's take a look at the FANG stocks. Facebook down $5, down 2%. Apple down, Amazon down, Netflix down, Alphabet down, Microsoft down, and these are like big drops now. I mean percentage wise too. The big drops. I realize down, $5 on a stock that's $3,000 a share is not a big deal. But when you look at the percentages, these stocks are dropping 1 to 3% daily. That is a big deal. And because they are so overrepresented in the major averages that when they go down, they have a tendency to pull everything else down with them. So really just an ugly day. The reopening stocks. Well, this is a bit of sector rotation. The reopening stocks, Carnival was up today, United Airlines, Delta, Royal Caribbean. Some of the others were off a little bit, but you had airlines that were up. So that's, airlines are emblematic of the recovery, reopening stocks. They're not up enough, though, to really make up for the downside in the tech stocks. So let's just take a quick look at the sectors. Building materials is the winner of the day, XLB. That's the ETF that represents building materials, but still down, just down. It's the smallest loser of the day. How about that? And at the bottom, we have, what do we have? We have energy, Technology, utilities are down. That's interesting. That utilities and technology are at the bottom of the pack. In the middle, you have industrials, financials. Like to see those do better. So that's just overall. There's really not a lot of great things to say about today's market. So let's talk about why. Let me stop sharing the screen. There's a few things going on. Okay, the big one is the election, and we're 50 some odd days away. It's really coming up already. It just seemed like it was so far in advance and just going so slowly day by day, and it's really coming up fast. And it's tough to say who's going to win. Are we going to have a contested election? It's just we have a lot of open-ended questions, and I really think it's very difficult for investors to gobble up stocks and move the market higher for a little while. While we're going through this process, the democratic process. The other thing is Congress, the Senate, could not get a coronavirus relief bill through. It looks like there's no $1,200 stimulus checks coming right now. So that is another negative. The economy can use a couple of $1 trillion infusion because we had the end of the $600 per week for unemployment from the government, in addition to state benefits. So that's out, and now it looks like a lot of things are starting to slow down, and colleges are open, and you see a resurgence, at least through colleges, of COVID-19 cases. High schools all over the country just started between this week and the last 2 weeks before, and it's going to start getting cold out in North America soon. So people are worried about a rebound in COVID cases, and put this against the backdrop that it is expected that Q3 that we're in now and Q4 will continue to improve. That's it. That's an expectation. It's a forecast. Today's unemployment claims were not that great, a little worse than expected. I think economists were expecting 850,000 unemployment claims today, first-time unemployment claims, and we got like 880,000. But we really need that number to, we need that number to keep coming down. We only have one more non-farm payroll employment report between now and the election. We're going to get the September number in the first week of October. The October number, when it comes out in November, it'll actually come out after the election. So there's a lot going on, and President Trump was recorded, and he gave permission to be recorded. It's not like it was a gotcha moment. He actually gave his permission to be recorded. So there's a lot of information to glean from that, 18 hours worth. So people are wondering how that shakes things up. So there's just a lot going on, and I find that now that the technology stocks have finally broken their uptrend, and people kept putting money into the Amazons, the work from home stocks, the FANG stocks, the Amazons, the Alphabet, which is Google, Microsoft, et cetera, Netflix. Now that the uptrend in those stocks is broken, I looked at the charts and it looks pretty broken to me. You have to wonder, is all the good news factored into these stocks? At some point, they become so highly valued that even if they come out with great things going forward, like Apple's coming out with a 5G phone, so there's a whole, potentially a whole big upgrade cycle. Amazon is doing all kinds of new initiatives, so is Google, and so is Facebook. But, at the $1 trillion valuations that these companies have, it's probably factored in by now. Do people expect Apple to go from a $2 trillion to $4 trillion valuation? It looks like a lot's factored in, and so something has to happen. Either valuations and earnings have to improve, or stock prices have to go down. What we're seeing right now is regression to the mean, and tech stocks are way above their long-term moving averages, and it looks like they're just going to keep regressing to the mean. My own thought process here is I've been saying this for a few days now, that things keep things look to go lower. Stocks look like they want to trade lower. So that doesn't mean, by the way, that I'm going to go through every single client's account and say we're going to sell this, we're going to sell that. I did that already. The last, the middle of August is when I started taking some gains, and I talked about this on the show. So you kids, oh, you're pumping these stocks up and not telling us, no. I said rebalance, take profits, make sure that you're not overexposed to these big tech stocks because they're up so much, and you have to be prudent about it. You have to scale some back. I'm glad I did it. Actually, now that market's coming down so much, I'm like, I wish I did more. But that's what up markets and down markets do to you. You can't look back. You have to say this is the right level of risk for the client, and now we leave it. So then we go down, the market goes down. It's not a matter of a binary event. Oh, the account is down, you're wrong. The account is up, you're right. It's the account is set up for somebody based on their personal finance for the long term. When you make your decisions based on your own personal finance, you're always right. It has nothing to do with a short-term move in a stock or the stock market. You have to make sure that you do what's best for you. That's what I help people do, by the way. So that's my story, and I'm sticking to it. Just because I think the market goes lower does not mean that I sell everything. I could be wrong. Maybe the market turns tail and goes back up. But I'm not going to just sell everything. I did the profit taking that I wanted to do. I rearranged accounts. I rebalanced clients' accounts, and now I'm happy with where they are. Ultimately, for the long term, it's not timing the market, it's time in the market. And I want to reinvest dividends. I want to rebalance, compound, etc. And then we get into the personal finance. I know we focus a lot in the stock market here because it's just been so volatile this year. But ultimately, the most important thing you could do is personal finance, like investing monthly, holding on to what you have, and making sure you have an investment portfolio that is right for your objectives and your risk tolerance. This way you won't be pushed into selling everything when things are down, and you won't be pushed into just running out and buying stocks just because they're going up, which is what happened to a lot of people up until the beginning of September. And now those people are like, I can't believe I paid so much money for these stocks and now they're going down. I should have known better. What was I thinking? Personal finance. All right. So that's that. I will see you on Monday. I'll be in tomorrow. If you'd like to join my email distribution list, I send out cool, funky stuff. Funky. And, take a look at it. If you want it, great. If not, that's okay. So who's out there? Judy. No, Andre is out there. Andre Tiller, Rob Balasabas. Thank you guys for joining me. I really appreciate it. And our high school started this week on Long Island where I live. So all of a sudden getting up at 6 in the morning after being on vacation for a week and a half, I'm a little groggy. So hopefully we'll get some sleep tonight. We do have a comment out there. Hey, man, I always get in when you all end. Oh, that's so funny. All right, well, that's at the replays. Listen, 4:30 Monday through Thursday is when I get started. I'll make sure we're connected on LinkedIn so you get a notification. And Andre, thank you very much. I really appreciate it, and I appreciate your humor. It was pretty funny. Okay, and I'll see you Monday. If you'd like to give me a call, hey, the office number 631-920-6622, 631-920-6622. You're welcome to give me a call, and that's about it. I am going to sign out. 104-10-4. Thank you. All right. See that? I knew that. That's a 10-4. All right. See you guys Monday. Thank you.